Hello and welcome. How are you now? It's the Theory of Thing regular investment podcast. I am James Whelan, your host. It is the 14th of the 3rd, 2025. I'm joined by Heath Moss of HLM Investments. Heath, how are you now?
Very well, thanks, mate. As well as I can be. What a week it's been, eh? In the
What
markets.
happened? What was there saying? Football's
No.
football's back. It's anything I
Oh,
care about, mate.
footy's back.
Yeah.
Fantastic. And that game last night, generally I don't look forward to it, Richmond and Carlton, but it was a cracker, and it was good to see that young Tigers side get up. So yeah.
Wakey wakey. Thank you, Wakey Wakey as well. It's brought to you by Wakey Wakey and obviously an amazing Tigers. That was hilarious. Thank
Mm,
you. We are good. We are recording.
mm.
Yeah, they did come back. We'll get into that towards the tail end of the show, mate. Coming up on the show today, we've got eggs, we've got copper, we've got the Aussie market. What else we got from your side?
That covers it. Obviously,
All right.
we cover the usual stuff, US markets, etc. But yeah, it about covers it.
Okay, good. And a short and sweet one today. We're going to get through it. Thank you very much, everyone, for the support of the big show that we did
Mm.
that dropped 2 weeks ago. An absolute nightmare of organisational capacity, but we did manage to get through there. Thank you to Matthew, Chris Lawrence, Mark from Global X, all of the people that helped out with that one. It was a good show. It was a big show. It did really well. Now
Very big.
let's talk about let's talk about some news that's just dropped. So I've got some news here. So I'm gonna start with news.
You go for it.
Yeah, hang on. So I'll pull it up here. Oops, man, I'm causing an absolute nightmare over here. I'm shaking. I'm shaking like a leaf. I've had so much coffee. Uh, Mate, Impact Minerals. You know that I love Impact Minerals. They just
Yep.
dropped some news coming through here. Significant drill targets for nickel, copper, PGE identified at the Caligula prospect, uh, which is great. That's in that southwest terrain, sort
Is
of in that
this
in what
is this the
in
new one they picked up?
West Australia. The new one they picked up? No, they've just picked up one in Broken Hill that they're going to search
Ah,
for
okay.
copper out there at Broken Hill.
Okay.
Anyway, that's Impact. Check it out. The news is hit there. It's an anomaly, very strong conductor. What am I looking at? What sort of thing do people want to know? Drill planning is underway for Q2, supported by a $180,000 co-funding grant from WA. So that's some good news from Impact. That's good.
Mm.
They are currently in the middle of a raise, a rights issue, renounceable. One of the first things I remember looking up. Sorry, the first thing. What was the first thing? Here's the question. What was the first thing that you looked? So anyway, great news for Impact. Fantastic. Check it out. Uh, what was the first thing that you remember looking up when you started in finance? When you started in stockbroking or advisory?
Think
Can you
the guy
remember?
that was mentoring me told me to get to know the top 20 stocks like the back of my hand at the
Good.
time. So, and that's what it was the banks and BHP, West Farmers, all that sort of gear. Actually, the top 20 hasn't really changed all that much.
No, it is not.
No, no, but yeah, it that's
ABB would have been in
yeah,
there. Maybe ABB has been taken out. That's the only one
yeah.
that's not there anymore.
But yeah,
Yeah.
what about
Okay.
you?
So went through that. Figuring out what molybdenum was. I remember I was recounting this story the
Molybdenum.
other day. Molybdenum. So it was Tim. I can never remember his last name. He's one of the best
Mm,
resources analysts around, and he
mm,
covered Rio Tinto, and he did the big players. He did Rio BHP for us
yeah,
when I was at Ausstock in 2005, my first job in actual finance after I left the ASX surveillance department. The uh, yeah, and he was talking about molybdenum and how the
yep,
acquisition of molybdenum or the discovery of it was the acquisition of a Millennium play that was bolting on to Rio 2005, and what it would do to the stock price and the bullish case that he had for Rio Tinto in 2005. And I had to look up a lot of stuff that day. Molybdenum, what it does, where it is, it's a steel hardener.
yep,
And that's what I looked up. That's what I remember looking up. So that was I can't remember why I was thinking about the things that you looked up when you look up. But
yeah.
I think I was just looking at the impact announcement. That was something on there that I had to try and think about why I was talking about. Anyway, so that's great. That's nickel.
Mm.
Yeah. So that's going to go well for them, which is good. Yeah. So they're in the middle. Oh yeah, renounceable. That was the second thing that I looked up. What
Renounceable.
renounceable?
Oh,
Renounceable
okay.
versus non-renounceable.
Yep.
It's just the ability to sell
On
it
market.
on sell it on market, right?
Yep.
I just wanted to say that. Why do you need why do you need fancy Spanish for this one, right? Just
Oh,
say what it is.
it's the same in medicine. It's all Latin and stuff, and they'll tell you you've got this certain condition, and it's like, okay, what does that mean? What does that mean?
Fancy
So
Dan
yeah.
corporate teams with your nonsense words in there. Anyway,
Mm. Mm.
All right. So Heath, mate, so let's talk about copper.
Yeah, let's do it. All right. Do you want? I'll share my screen actually. Get the copper thing up
You share
and
your screen.
going.
I'm also going to pull up. There was a beautiful article in Bloomberg that dropped with regards to smelting, and I'll just see if he's
Smelting.
got here. Okay. Yep.
All
Top
right.
top Chinese copper. Just so that you get an overview of the news that dropped this morning. Top Chinese copper smelter cuts output to combat low fees.
Yep.
Which is great. You know, if you just kill all your chickens to make egg prices go up, we'll get to that later. A leading Chinese copper producer is cutting run rates and bringing forward planned maintenance as a plunge in processing. Fees and cutthroat competition force producers to scale back some operations. Heath, over to you.
Yeah, look, what I've got up on the screen is the comics copper futures, and you can see there we're what are we knocking on the door of $5 a pound again,
Boom.
which we were back in May to June last year, and I think close again about another year before that as well. So, and that's all coming down to the smelting problems, which we knew of. It was towards the end of last year. I think those smelting problems started rising. They got an overcapacity of smelters in China and can't
Mm.
source enough copper at a reasonable price. So
Mm.
that tells us that copper is undersupply and smelting in oversupply. And obviously the fees they charge to do that, I think they went negative or have been negative for
Yeah, it was
a little bit
a
of
rare
time.
time negative. Yep. Yeah,
Yeah,
yeah, yeah.
yeah, yeah. So
It happens.
so that's got everyone excited about copper. Second reason is tariffs. There's talk of similar what happened with gold. Companies trying to get ahead of tariffs and bringing in physical copper into the US. That's pushing spot prices up. And then of course you got the Chinese turnaround. The property market is looking a hell of a lot better than it was 6 months ago. And the Chinese economy is starting to look better with the promise of more stimulus as well. So that's got copper moving upwards as well. And of course, you got general demand supply dynamics there. So yeah, it's what do we bottomed out around $4 a pound here in early January and is up 22% since then. So performing
Outstanding.
extremely well. Yeah.
Okay, and I'll pull up the other little bits and pieces that I've got here. That's on research. That's there. Advisors and what was played. So Citibank.
Mm.
Citibank Citibank updank on copper price. We revise our 3-month copper price target to $10,000 a ton. This is all US dollars, from $8,500 a ton ex US. We previously called for price resilience around 9,400 for the remainder of first quarter 25, but now think copper can climb to $10,000 a ton in March amid temporarily stronger US copper import demand and broader concentrate and scrap supply constraints. We think ex-US physical market tightening is likely to persist through May, June, temporarily offsetting price headwinds from broader US tariff announcements until late Q2 25. Thank you, Robert Friedland, who gave that to us via Twitter. So that's Citibank updating, like basically doubling, or no, sorry, adding what's that, another 15% onto their
Yeah.
onto their copper target. So I'm happy to be bullish there. I know that
Yep.
Paola Rojas listens to us intently, and she'll love that I've given copper a big plug there. Fantastic. Hopefully, she can give us a few copper names that we want to have in there as well.
She loves her copper. A nod to Global X from the last show. You've got the Wire ETF, which covers all copper, major copper producers around the globe. That's under the code WIRE on the
Yep.
ASX. And then we've spoken about a couple of little copper stocks we like, outside of your BHPs, etc. A Developed Global, DVP, which have done very well
Oh wow.
following the copper price there, up
Mm.
around that $3 mark. And another one I like is A1M, AIC Mines. And they look like they're going to break out anytime soon, around 40 cents at the moment. Both of those
Not bad.
companies are smaller producers, 30 to 50,000 tons, and just starting up old brownfield mines again. So I think that's where the money can be made in companies restarting those older mines that were shut down years ago because, the copper price didn't support it. So have a look at those.
I agree that there are some beautiful ways to be able to pick up that copper trade at the upside. Okay, what else have you got on your screens at the moment,
All
Heath?
right, let's quickly cover the markets, the SPX, the S&P 500 as we know it here. Now that is down. What are we down? We're in correction mode now. As of last
Yep.
night, we're down 10.2% on the SPX from the high to low. So that's
Ugh.
official correction mode. So here's a stat for you. In 19 of the last 34 years, we've had a correction on the SPX of 10% plus, and they average a 14% drawdown. So
Yep.
maybe we're pretty close to the bottom. Volumes are quite heavy. Selling volumes are quite heavy, which would suggest would also maybe be quite close to a bottom. But that's a good stat. But yeah, it's down
That is a good start.
10%, 10% since the highs, and off. What are we off? 4%. Oh, geez, 4% since last Friday. So that's a decent drawdown. Nasdaq again down almost 5% over the last week, and down about 14% from its highs. Obviously in correction mode. If we look at the Russell, because the small caps were touted as one of the the go-tos for 2025, and
Yeah.
that's down about almost 13% for the since the same period. Around the 19th of February is when everything started selling off. So
Yep.
it's off probably over 20% if you take it from its highs the end of last year. So that's that. And of course, what's driving this is uncertainty around tariffs, actually uncertainty
Oh.
overall. So uncertainty around the tariffs, how much they're going to be charged, who they're going to be charged, when they're going to be charged. They keep flip-flopping on this to the Trump administration. And I don't know whether that's on purpose or not. And I'll explain why in a second. But markets hate uncertainty. It makes it difficult for the markets to price risk, and hence why the markets sell first and ask questions later. So that's why we've got the bit of the sell-off at the moment, and obviously that's causing growth fears that the US would head into a recession. But you talk markets, and headlines often talk about booms and busts, but they figure about there's a lot of in the middle there, a lot of ground in the middle there, and I think that's where we're headed. The US won't head to a recession; they'll head to a slowdown of say 1.5% GDP from around the 2.5 to 3% this year. And I think what Trump and his administration are trying to do is they're very focused on long end of the yield curve. Scott Bessent has said it several times. They are focused on the 10-year yield, and they want to get that down. One of the main ways they are able to get that down is to slow the economy. And obviously that's what they're doing with these tariffs. I mean,
Oh, mate, the genius
yeah,
move of this one is that eventually, yes, rates do get cut because they've
yeah,
crippled, maybe not crippled an economy. That's a bit of an oversell, but
mm,
definitely hampered it.
yeah.
The question is, and I heard this on the Morgan Stanley podcast the other day, talking about like, is the Fed likely to blink about that,
I think,
about those moves? And that's the question that's going to come up is okay,
yeah,
Jay, now it's on you.
yeah,
And if you don't, then there's going to be conversations to be had about this, because the economy is slowing. We've seen the GDP now came out late last week talking about how it was, very a recessionary sort of feel to it.
yeah.
Will the Fed move based on what they think sort of is going to be predicted to maybe happening sort of maybe potentially in the future? That's
Yeah,
something
look,
that's something the Fed doesn't do.
no, and they don't, and they've said numerous times they're data dependent. So I think
Yep.
obviously next week we've got the Fed meeting, and there's a 0% chance of a cut, but there is now a 100% chance of another cut by June. I think that may be brought forward. I think, do they have a May meeting? They've got April off and May back on, or something like that.
I just know that June is not. I didn't think June was locked in, but
Yeah,
I
it's
thought it was about
100%
80.
now, as
Okay.
of last night.
Well, I did hear that a couple of nights ago that 80 basis points is factored in.
For the rest of the year.
Well, yeah.
Yeah,
For
so there'd be
June.
another 3 cuts, and I think well, I've got the 10-year on the screen now. It's down about say 50 to 60 basis points from its highs earlier this year,
Yep.
when Trump was inaugurated. I think if there was real recession fears, this would be a lot lower. The bond
Okay.
market would be a lot lower, because I don't think there is too much cause for concern for a reflation or inflationary impact from tariffs. It's a one-off hit if there is inflation. Goldman's put out a great research paper about it at the start of the year, saying it may increase CPI by 30 to 50 basis points, so 0.3 to 0.5%, which is in the grand scheme of things not much, and it's one-off. Like if they put tariffs on, and the price maybe go up, and that's it. Kind of like when we had the GST here. So, but it's the impact of this uncertainty and this flip flopping that what it does to business, and that's why I'm saying it could be on purpose to slow the economy, because business
Yeah.
can't plan ahead. They can't say, well, if I'm going to start importing stuff from Europe, am I going to get hit with a tariff on the way, way back in, etc. In 3, 5, 6 months time or whatever it is. It's just very hard for business to plan, so they'll just sit on their hands until they get more clarity, and that's what
Yep.
will slow the economy. And it's like what the Fed had to do with interest rates and inflation. The Trump administration has to thread this needle so carefully and not push it into recession. Because they're saying at the moment they won't rule out recession, but I mean, if they're going to come out and say, "Hey, we don't want to go into recession," then the market's going to get confident again and start pushing asset prices back up. So, yeah, that's where we're at the moment, and it's difficult. The horizon of the outlook of the markets is so difficult to forecast at the moment, and hence why you're seeing the sell off we are. So yeah, and the US dollar, bring up DXY, has plummeted over the last few months. Was around 110 at its peak in the start of the year. It's now around 103. A lot of that is to do with the euro. The euro is strengthening quite substantially because of the better outlook for Europe, etc. Same with the Japanese yen, and two of those make up about 50 to 60% of the Dixie. So that's why you're seeing the Dixie go the opposite way. But oil is doing the same. Economic sell down fears. Oil down at 66 barrel. Plus, you got the drill baby drill policy, which will increase supply, which will push prices down. Yada yada yada. So yeah, it's just a major general sell-off overall when it comes to assets and asset prices, except for gold, which I've just noticed. Maybe what is this? The comics has
Yeah, that's a record.
crossed over 3,000. We've got 3,001 on the ticket now, and this is probably delayed. So,
Well, congratulations,
yeah,
everyone. We did it. We got
we did
gold
it.
to 3,000.
We did, and it had a big night last night, and silver did the same. I did jump on and get some clients in some silver about 2 weeks ago on the ETF. What's the code? ETP MAG on here on the Australian market. It's similar to the gold ETF. Again, a global X product. But you can see the breakout there on silver. I think it was around 33.50 was the breakout. It's now around 34.50. So gold and silver both looking very, very good at the moment. And those Australian gold producers will be cleaning up with the Australian dollar falling again. So, yeah, that's about it. I think that covers it all. I don't think
That does
we can
cover it
go-
all nicely. Yeah, I
yeah.
don't. I mean, this is just a short, sharp, sweet show.
Hmm.
Good. I don't
Yeah.
know. I got nothing else.
No,
Let's talk. Let's
that's
talk.
it from
Mate,
me.
that's it. Where do we see it going? Is it going to come up? I had some amazing stats that were put together about when the market is oversold, and exactly what happens when it hits the oversold territories. And I
Yep.
will pull that up on my little thing here.
All right,
Hang
I'll
on.
stop sharing and you can share.
Nasdaq hits oversold and bounces back every time like clockwork. Every time. Hang on, I'll share. I'll just got to share my screen here. Hold on,
Go
people.
for it.
Yep. Yeah, I'll close with this, or at least we'll go. There you go. That's courtesy of.
Beautiful.
Yeah, every time the Nasdaq gets down below that RSI, and this was from Zero Hedge. Every time the Nasdaq gets down below that RSI of 30, whatever it is, it's there, bounces back every time. Every time.
Yep.
It's the time. I'm not saying charge in, guns blazing, but I'm just saying it's that there's a point. There's a point that you just But there's two things with the tariffs that are coming out. First off, it's not like back in Trump 1.0 when he did this sort of thing. Trump 1.0 was against China.
Yep.
One person, one enemy, everyone on board. Okay, that's great. This one is not like that. This is playing against at multiple fronts. So this is why it's happening that way. Second off, is why the reason that the market has reacted the way that it has is because people know that there's a playbook for what this actually means, and that's why it's been so severe and so quick. And this has actually been quite a quick over 10% drop. That because there's a playbook for it, everyone sort of knows what's going to happen. Okay, great. As opposed to the question marks over what does this mean for China? Is China going to get around them? How are they going to do these sorts of things? What's going to happen? It's just like, no, it's a more immediate, okay, we now know devalue it by X until whatever the next thing happens. So there is that. All right, let's do the footy
And
tips
what?
because we've opened up another office here. So because we're growing in size, and so someone's putting in a doorbell
Oh,
to
beautiful,
the other
beautiful.
office.
All right, I'll
Yeah.
just quickly say what I've been telling clients when I just said on Ausbiz is start
Yes.
trickling money in. We can't pick the bottoms. We never will be able to. This could be the bottom. We could be another 10% down before the bottom. But if you've got available cash, start trickling it into those quality names, and that will benefit your portfolio over the long run. It will bring those average prices down. So,
Yeah.
yeah. But footy, what are we? Footy.
All right. Well, I've got
Uh,
Jai Ayub. I'll go first. Jai Ayub, who is our amazing my partner in crime, my business partner that's up here running the show of Barclay Pierce Capital's wealth management team. He also does the event side, 247 events with Robbie Farah. That if you want to get a good event, then go for it. They just got back from Vegas and absolutely loved it. G'day, Jai, if you're listening. And this is my hat from Broken Hill Mines, which is just having a supplementary prospectus. Broken Hill Mines. They did an offtake agreement, and now they've pulled the prospectus. It's always. I tell you what, I saw the headline, or it came up on my feed that Broken Hill Mines had pulled their prospectus. It's just like, oh, something's gone wrong, because we got a little bit in it. Like no one can get stock. No one can get stock in this thing. No one can
yep.
get stock in this thing in Broken Hill Mines. We've managed to get a very small allocation because we're good at what we do, and then it's just like prospectus pull. People will get their application money back. It's just like, oh no. But no, it's just because they've signed an offtake and there's been huge demand, and they're going back out again. So
That one's
it's a rigmarole. So they've got to do a new
z-
prospectus just with the offtake, which is material different, makes a material difference to
yeah.
everything that's going on.
Is that
So,
zinc? Zinc that one? I can't
mate, it's
remember.
Broken Hill. Yeah, zinc. It's zinc.
Yeah,
It's silver. Yeah, it's
copper.
all the good stuff.
Yeah.
There's a little bit of
Yeah.
copper out there too.
Yep.
But yeah, it's and there's
All right.
there's there's lots of it that hasn't been dug out yet. So Jai, thank you very much. I'm literally just pulling up what here. He thinks the Broncos are going to absolutely thrash it. So his special this week. I mean, last night's Dolphins game was the real special. Just know that they'd get towed up.
Mm-hmm.
Broncos will absolutely destroy the Raiders.
Yep.
Put your house on it. All care, no responsibility on this one. I'm just trying to find the line. 13.5. That's good enough for me. Broncos to win by 14 or more. That's the special of the week for the Barclay Pierce Capital team. Heath, from the
All right.
HLM team, what's your special?
All right. I got three. I'm going with my Crows playing Saints on Sunday afternoon. The line is 17.5. I think we win by more than 3 goals. That's paying
Nice.
$1.90. If you want to go a little bit riskier, I think Riley Fieldthorpe to kick 3+ goals. That's paying $4.40. And if you want to roll the Hawks the Crows line into the Hawks line of negative 22.5, that'll get you $3.60. But the Hawks play tonight, so depending when this podcast airs, when it depends if you're going to get that multi on or not. But yeah, it's great, just great to have footy back after that debacle that is the 0 round or whatever they call it.
Queensland, you disappoint me time and time
No,
and
I know.
time again, Queensland.
I know.
Look, you've been told twice. We should just cut the
Next
whole
time
damn
we're
thing off.
annexing you. Next
Cut
time
it
it's
off.
just cutting them
COVID
out.
was bad enough. COVID was bad enough, and a Palaszczuk that BS that happened during COVID, and then they want to pull this sort of malarkey.
Mm.
Storm that is no storm. Oh, look at us, we're going to be blowing soda. It's just some heavy rain.
But anyway,
No words.
we're
On that
glad,
note,
we're glad it never turned into anything too bad.
oh yeah,
So,
yeah,
yes.
absolutely. Tragedy averted. I got no problem with that. It's fine. Yeah, please don't write any letters in. Not that any of our listeners know how to read or write. So thank you very much, everyone, for listening, and good day to all of my big fans that also tune in. Make sure to be tuned in 2 weeks' time for our next iteration of Big Show. We've got suits and more restaurants, and travel is going to be on Big Show as well. I'm going to redesign the way of organising it because I can't do that again next week. Next time, mate. That was too much. That was too much organised. I had no idea what's going on.
Fair enough.
It's going to be a very simple sort of thing. I got to change the setup. Anyway, well, thanks very much for tuning in. We were going to catch egg prices, but egg prices have plummeted. That was pretty much all. Yeah, eggs have come right off, mate. Eggs have dropped by about 40% from their highs.
What happened there? I mean, I thought they were crying about sky high egg prices.
Yeah, it's our egg expert. You know where I'm going with this one. Right?
I'm going
with this one, pal. Okay.
All
on
right,
that note, I'm going to leave that one. Hang on, I'm just seeing where the egg. What I did have egg prices in here. Wait, am I still sharing my screen?
Yeah, you are.
How much have I been sharing on this thing?
Oh, it's only just come up now.
Oh, just that. Okay, good. All right, I'm going to stop sharing it now.
Yeah.
Thanks very much for that. Yeah. Cheers. Have a good one.
No worries. Have a good one, everyone. Go Crows.
Go Crows.